All right. So far, like we talked about at the beginning of the webinar, the market has been in this bullish context and the overall uptrend is still intact. We're simply balancing at higher prices. The buyers have been very resilient and they've stepped in at pretty much every pullback along the way. So at this point, as far as going forward, we're going to be watching to see whether today's breakout actually holds. NQ made a break to a new high on the year. TF is really the only warning sign right now, and it's been a bit weak compared to the other markets, but that picture could change. TF could start catching up and moving higher. So in the S&P, heading into tomorrow and heading into Friday mainly. Friday we have the employment report, which is a catalyst for market movement. And then in the overnight session, heading into tomorrow, I think there's a ECB announcement from the European Central Bank, so that could be a catalyst as well. But right now, really the question is this breakout going to hold? Because this breakout happened on very light volume and on very mediocre internals. So, it wasn't a big break from balance, right? So if you look at kind of, just this recent 2 to 3 days, you'll see that we balanced basically between 1914 and 1924. And then today we got the breakout to a new all-time high. And then on this pullback over here to 1924 was the breakout retest and it held, right? So from a price action perspective, so far it's okay, but the problem is that, the breakout happened on just very mediocre internals. It didn't really have that broad market strength, that you would expect from a real breakout, and it only went a couple of points up. The previous all-time high was 24 quarter, now I think it's 27. So it wasn't like this big breakout from balance where, okay, now, I can just continue higher. Right now, this breakout still has to prove itself. And even though we know that the bullish context is intact, now we want to see whether this breakout actually holds and continues heading higher, or if the breakout fails, then we could be heading to the bottom of the balance area and then probably even lower because we've tested this area several times, and at this point if we head back down to it, I don't think the market's really going to have a lot of confidence in this 14 to 16 area, and I think we're probably going to end up going down to that naked V pocket 1912 and then probably down to this 1907 to 1909 half range, which is where we balanced before we broke out to new highs earlier in the month, or sorry, end of last month. So, right now we're going to be watching NQ to see if it holds above its breakout. So whether it holds above like 37, 37.33 to 37.35, that's an area to keep in mind for NQ. If we look at TF, and we can look at this chart over here, which shows you kind of all the markets side by side, you can see that ES is at an all-time high. NQ made a marginal high, right, after balancing in this range. But TF is, quite weak. And, overall, you can see that it's really far off from its yearly high, right? So this has really been a red flag for the market, right? This is a problem in this whole uptrend in the S&P and Nasdaq is really the lack of participation, from the small caps, from the Russell. Typically, the Russell leads to the upside, and in this case, it's just been really struggling. And you can see over here that it kind of formed this short-term balance up here, right in this range, and then just broke down pretty heavy. And even in the recent few days, if we zoom in a bit, we can see that as ES broke out to new highs, TF came up over here, still holding below its recent swing highs over here. So it's been relatively weak, right? And then we balanced for a few days in this range, 1130 to 1140-ish roughly, and then got this breakdown, and now we're back up testing this area. So it's going to be important to see whether TF can, now start trading above like 1132, 1133 and heading back above to 1138 to 1139, that'll tell us that now there's potential for TF to put in a catch-up move. And we know that when TF does start catching up, it can do so very quickly. But, this is a warning sign in the market. And then the light volume is making it tougher to really have conviction in the buy side. It's just been a very trudgy market. And, for that reason, we've been playing a little bit more defense and just being very cautious with our trades, especially on the short side. We've been very careful with it. So now heading into tomorrow, let's keep an eye on like this 21.5 to 23.5. That's like a intraday breakout zone right over here. And we don't want to see the market trading really much below it if the buyers are really going to maintain control. Ideally, if this is really going to be a valid breakout, we should hold above like even this 23 to 24 area now and continue higher. But if it starts heading lower and then starts breaking below, 21, that could lead to a breakdown and, end up coming all the way down towards this 1905 to 1907 range, the bottom of this balance that was developed earlier before we got this breakout. So right now, these are things we're looking at just because, the volume's been so light and today's breakout was kind of a mediocre breakout. So we know that, that bullish picture is still intact, but we're flexible and we're open to the idea that this could fail, right? Which means that you have to have a very neutral to slightly bullish mindset, where we're giving the benefit of the doubt to buyers. We're still giving more edge to the buy side, but if things change, then we need to be able to adapt, and we can't just be locked into this upside view. We can't just be locked into, oh, it's an uptrend, we're just going to buy every pullback, because now the market has spent, about 4 sessions balancing here, and if this breakout doesn't hold, then it could result in a complete failure. And it doesn't mean that, we're going to go, all the way back down to, put a huge breakdown, but it means there can be some profit taking, right? And the profit taking can take this market down to roughly 1905, 1907 down here. So this would be a very valid and logical target if this fails. A move down to 1905 to 1907, and it wouldn't be a big deal, right? It wouldn't affect the bigger picture uptrend. It just means that on the smaller time frames, the shorter time frames, we would see some profit taking, and then we would simply establish a bigger balance area, right? So it doesn't mean that we're going to now be in a downtrend. The trend is still going to be pointing up. We'd have to put in a pretty significant down move at this point to change the overall trend. And that's why I think even as we move lower, there will be good long setups along the way, and there will be bounces, at support. But short term, we just want to be a bit careful up here so that we don't get caught on the wrong side. And if we do, then fine, it's one loss, and then you adapt and you adjust, and then you start shorting the market, right? Because once this does start going, I think it's going to have some momentum behind it because a lot of people are going to be trying to take profit then, right? No one wants to be the last one out. And when everyone runs for, the same exit, usually it results in a pretty decent down move. So, short term, as long as we hold here, we can still head higher, bigger picture, things are looking okay. But, we just have to be flexible and be willing to adapt when the market conditions change. But we don't want to call a top, right? That's one thing we definitely are not doing, and we don't want to do is predict where the top is going to be. Let the market show you, let the market kind of tip its hand and give you some signs that now it's kind of topped out short term, right? But don't start predicting that, oh, now the top's in, now we just have to go lower, because that process can result in a lot of losses before you finally catch the down move, and it's just not a worthwhile strategy, right? So that's how we're shaping up right now. Let's see how well the buyers hold it up, kind of on any, pullbacks into the previous high, into 23. And then the last line in sand, kind of short term, is really going to be this 21 to 22 area. Don't really want to see this taken out. And, if it does get taken out, then we can expect some profit taking and momentum on the downside. So that's how things are looking at the moment. We do have some catalysts for a directional move heading into tomorrow and heading into Friday. So I think we will get some better movement here. But it can be to the upside or the downside. The overall trend is still pointing up, but if things change, then we'll adjust and trade accordingly.